Let's understand the difference between guarantor and co-applicant. So who is co-applicant? Co-applicant is basically a person who applies for joint loan with the main borrower. Whereas guarantor is a person who gives guarantee to the bank that this guarantor will pay back the loan in the event of default by applicant. So the repayment responsibility, if you take the case of co-applicant, it is actually primary along with main borrower because it's a joint loan. Whereas the repayment responsibility for the guarantor is actually secondary in nature. It arises only in the event of default by applicant. How bankers are going to evaluate the co-applicant and guarantor? Whether it's going to be on the same footing? Let's see. Lender will evaluate both the main borrower and co-applicant. It means almost at equal footing. Whereas when it comes to guarantor, the guarantor may not be evaluated in the same way, but bank will be looking at the credit score of guarantor. That's very important. Let's look at some examples. You will see co-applicants in cases like husband and wife applying for home loan, car loan. You will also see father and son or father and daughter applying for home loan, educational loan and all. Whereas guarantor, you will see mostly like family members or third party guarantors also for business loans. Let us also look into the pros and cons of co-applicant and guarantor. The pros of co-applicant. See, if co-applicant has very good credit score and if co-applicant has a stable income, then that will increase the likelihood of loan approval process. That is, if husband and wife are applying and wife is having a good income, a good credit score, then that will increase the likelihood of loan approval. And there is also going to be a combined tax benefit for both husband and wife in case of home loan. I mean, not only husband and wife, that is, if there is a co-applicant and if there is a home loan, then there is going to be combined tax benefit, and this could also result in increase in eligibility. That is, when only one person approaches for the loan, eligibility will be certain or it will be limited. But if a co-applicant with a good stable income and credit score joins, then that will increase the eligibility. Let us also look at the pros of guarantor. When you have guarantor, it will actually help you. I mean, as a borrower, it will help you to get credit even if you don't have much of credit history. Even if you have low credit score, with the backup of guarantor, you will be able to avail credit. And if you are someone who have just started earning income, then guarantor support will be very significant and phenomenal. These are all the pros on the side of co-applicant and guarantor. Let us also look at the cons. In case of co-applicant, let's say there is going to be some dispute between the co-applicants. Then possibly it could put strain on co-applicant because the responsibility to pay the loan lies equally on the applicant and co-applicant. And if applicant, main applicant has some strained relationship with the co-applicant, then this is going to burden the co-applicant as well. The other issue or other cons can be the legal inheritance issue. This we will see especially in case of home loan and co-ownership. Let's say a joint loan is taken for home loan purpose, and let's say the main applicant deceased. So now co-applicant will continue with the obligation, but the property inheritance may go to legal heirs. In that case, the co-applicant will continue to pay the obligation, but the property can be enjoyed by legal heirs. So that issue is also there. And one more, credit score of co-applicant. It will be impacted in the event of default. That is, if the main applicant defaults, it will also impact the co-applicant because co-applicant has got the equal responsibility for repaying this loan. So credit score of co-applicant will be impacted. Now let us look at the cons of guarantor. If you are approaching a guarantor, I mean if you are making a request to him to stand as guarantor for your loan, then you have to become more open and honest about your financial position, I mean, revealing or making your financial position transparent is not that easy for each and everyone. Then interest rates may not be low. That is, if you are going to take loan only with the support of guarantor, then banks will see those loans as slightly risky, so they try to mitigate the risk by levying higher interest. So interest rates may not be low, and even credit ratings may be affected. What is this? That is, if the applicant is not going to pay, then eventually guarantor will be called to pay, and that will come under a case where the loan is not serviced on time, there were delay, and if at all some settlement and all happens, then eventually it will affect the credit rating of the guarantor as well. And once you give guarantee for a loan, then it becomes difficult to change the guarantor, because for changing that, permission of the banker is required, permission of the main applicant is required, okay, and banks will not accept for change unless and until another guarantor steps in. So these are all the broad differences between co-applicant and guarantor.